You're listening to Coffee with Innovate Finance, a podcast series where we're speaking with experts from the industry on the changing face of financial services and the future of fintech and financial innovation. I am Rashi Pandey, Head of Membership and Growth, and I'm very pleased to welcome two guests today. So we have James, who is the Director of Business Development and Sales, as well as Mark Mayer, who's the Senior Director of Products at Crowdz. So Crowdz is a fintech company focused on helping small and medium-sized businesses improve their cash flow. At Crowdz, they're rethinking invoices, cash flow, as well as trade finance by replacing outdated manual practices with the financial services industry invoice marketplace built specifically for small and mid-sized businesses. So thank you so much for joining us today, both James as well as Mark. Welcome.
Thank you, Rashid. Great to be
Hello.
here.
Perfect. So let's kick off with you, James. Can you tell us a bit more about your role at Crowdz and your background?
Absolutely. Thank you for having us. That was a great introduction. And excuse the sirens in the background. Living in New York City was always a noisy time. My role at Crowdz is I'm a director of business development, servicing North America and a little bit of Asia Pac as well, with Crowdz soon expanding down there. My background is rooted in banking. I was working at National Australia Bank for roughly 12 years, predominantly across the front exchange desk and doing a bit of underwriting as well earlier in my career. Post-banking life, I threw myself into the world of blockchain, cryptocurrency, and just general tech, and did some venture capital investing with a really great group out of Sydney. All that activity took me to America, where I met Crowdz and joined the company about 12 months ago. So it's been a wild ride and I've enjoyed every minute of it.
That's amazing. We all live in big cities and we all have sirens, so please don't be bad.
Yeah.
And how about you, Mark?
So my background is also in financial services. Initially I'm an engineer in telecommunication, but I moved into financial services, first with British Telecom, supporting financial institutions, and then in banking with Barclaycard, looking at mostly, I would say, card payments, innovation and new product developments, and also in ACI, which is a Miami-based company that provides software solution for ACH-based payments as well as card. And I moved to Crowdz about 18 months ago, managing the products. So basically, we have three product lines, which are a white label solution or platform, a multi-tenant of a platform, and an API-based platform, basically. And I was based in London up to, I would say, 2 months ago, and I moved back to Switzerland, my home country.
Well, Switzerland is a beautiful country, so there's no need for giving, a reason for why you shouldn't be moving there. But that's amazing. Thank you so much, both, for introducing yourselves. And I know I briefly touched on, what Crowdz does, but James, can you tell us a little more about, Crowdz, and can you please just dive a little further into it?
Yeah, for sure. So Crowdz was really built with the SMB in mind, the small to medium business. And really, we're looking to kind of level the playing field and empower them. And we feel like the best way to do that is to make access to finance really easy and quite affordable. So when we think about what Crowdz does, and it's interesting, we're an earlier stage business, so we're actually rapidly evolving and innovating. But at the core of what we do, I explain us as a fintech that is involved in invoice financing, and we've built several solutions. Our core solution is what we call the marketplace for invoice and SaaS financing. And essentially that allows SMEs to easily onboard within 24 to 48 hours. They can be up and running, and they can easily sell their invoices and recurring revenue contracts for immediate working capital. On the other side of that, you have funders, and funders at present, to participate in this invoice financing market, they'll typically go through a fund, and that fund may have fees. There may be certain barriers to entry, but through the Crowdz marketplace, they can directly onboard themselves and be on the other side of that financing. They can purchase those invoices and give that cash flow to the SMB. That is the core marketplace solution. Mark mentioned just before that we've been expanding our kind of product suite, and we now actually work with big global banks to enable them to service their customers better through our white label offering. So we have our core marketplace, we've white labeled that, and financial institutions can really reap the rewards of our automation and our, I guess what I like to call our tech savviness, and they can roll that out across their company. That's at the core of what we do. When you dig down into it, there is an API strategy that's really fascinating. We have a really interesting credit underwriting model called the SURF score, Sustainability, Risk, and Financial Score. Essentially, that leverages data sets both internally from the client and externally in market to arrive at what we feel is the ability for a customer to pay back on time. We're predicting that they'll pay back their financing. So that SURF score is a very interesting product. And lastly, we are building a tokenized version of the marketplace. We're putting receivables on chain and reaping the benefits of instantaneous settlement and financial traceability.
There's a lot that you guys are doing.
There's a lot.
Like you said, an early stage business, that is a lot. And I mean, working with very closely with a lot of small businesses, it's I can see why what you're doing is so important. So Mark, moving on to you, what was the original idea behind Crowdz?
So I would say I'll go back to the CEO, actually, Payson, who was working in Cisco and saw all of the problems a disruptive supply chain can infect the small and medium enterprise. So initially, the idea was really about helping those who actually cannot necessarily get access to capital when necessary, and they are the backbone of our society. So, if you're like a big organization, let's say Philips, for example, and you require working capital, you can get it easily at a, I would say, a proper discount rate. Whereas if you're an SME, it's quite tough. You need to know your banker, and then you either get a loan or you can go to an invoice financing solution, but the discount rate's not great. And basically, if I remember back in the time, he said like in 5 years, like 50% of SMEs are going bust. So because of issues on working capital. I cannot confirm the number though, but so that's what I remember basically. So there was the initial idea to create this marketplace. The evolution, well, initially we wanted to have I would say a multi-tenant platform like an Amazon piece where you have multi-founders, multi-sellers on the platform and having a bidding process. But more and more we're getting companies, large organizations, financial institutions, as well as other institutions or other companies like Meta are willing to actually white label a platform, going to market themselves and provide capital. So we have set several models in place that has evolved over time in regards of a platform. And finally, I'm sure we're going to touch this, but just I'll give you a bit of a preview. But when we discuss with large financial institution, capital providers, and so on and so forth, the supply chain finance is very, very old, very clunky, very slow. And basically, unlike, I would say, the B2C, where we've seen a lot of innovation over the last 10, 15 years, this one requires a bit more focus on innovation. And I think you can look at all the payments providers at the moment, and they're all looking at the B2B world. I think the main reason is the fact that it's not as as innovative as the other side, and I think there's still I would say quite a lot of money to make that. So that's why we are moving onto the blockchain to create efficiency.
That's pretty cool to know. And since you mentioned blockchain, what trends and disruptions do you currently see in the blockchain space now and in the future?
I can take that one, Mark. So I think it's been a really interesting evolution in blockchain, and I'll kind of talk around blockchain and cryptocurrency very briefly because they're two separate things, but people often mix them together. But with blockchain, I mean, really it started all in 2008 with the release of the Bitcoin white paper by Satoshi Nakamoto, which is a pseudonym. Yeah. And I guess people started exploring what they could do with this kind of distributed ledger, what they could do with Bitcoin, which is the decentralized currency operating on top of the Bitcoin blockchain. And then we kind of, everyone fumbled around with it. They're like, what are we doing here? There's no regulation. How do we incorporate this into our enterprise? If you fast forward through to 2017, 18, 19, there's been a lot of disruption in the financial space. And let me use one example that's really clear. International payments or cross-border payments. At present, all cross-border payments are running on the SWIFT network and have been since the 60s and 70s, I believe. Now, when a user, like a business or a consumer, sends international wire from one bank to another, that actual money flow goes through sometimes several banks. Lots of fees are taken out. There's no real-time traceability. And really, it's a very clunky process, if we're being quite frank. The introduction of blockchain really eradicated that. It removed all the middlemen from that flow and actually enabled peer-to-peer instantaneous cross-border settlement that either user could see in real time where that money was happening. And as it's being validated by nodes on the network, depending on whether it's a proof of stake or proof of work consensus mechanism will determine whether it's, mining or staking. But that was interesting because immediately all the fees that were taken out of the middle completely wiped out. It's now peer-to-peer, far more efficient and far more traceable. Now, that's one example. There have been a lot of other examples. Another one is around, take a bid and offer on a stock market, okay? Typically, there's a market maker in the middle, like if it's the NASDAQ. And then there's been a company, Uniswap, invented what's known as an automated market maker, an AMM. It's a decentralized exchange, often referred to as a DEX, that simply eradicated market makers. It uses algorithms and uses this concept of pooling together currencies to provide liquidity for people trading certain cryptocurrencies. That's that's a very technical example, but it's a very innovative thing that happened in the last couple of years. And they've done billions in volume in a couple of years. And once again, they've completely disrupted an industry that's very well entrenched in all parts of the world.
Go on, Mark.
Now, if I may add also regarding disruption, and if I reflect also back in the time, I remember, I don't remember exactly the time, maybe it was 2013 or 14, but the Bank of England issued a white paper about Bitcoin in particular and the risk for central banks or the economy in general of an alternative currency. And at the time, they were not really concerned about it. But what I see how things have changed is the fact that not Bitcoin is completely, replacing fiat currency, but central banks are now thinking about leveraging the technology. So I think it's quite clear now the European Central Bank really wants to do something around issuing the euro coin. So for me, it's quite disruptive. It's now like institutional organizations really looking at the technology and stop printing, physical money and issuing like digital money like this makes totally sense to me. Another point that shows, maybe things are changing is back in the time also in banking, we had so many projects around blockchain and in cryptocurrency. And to be fair, we got burnt. Many of these projects were basically smoke and mirrors, just win. And now it was a time up to now that financial institutions stayed away from blockchain project, but they completely back into it. And I think it's a proof that now the use cases are real and they're ready to put money again on this type of projects.
I like how you said the use cases are getting real now. So, of course, you guys, mentioned your white label platform. I know supply chain finance as a service is your white label platform, if I believe that to be correct. So can you tell us how that really works?
With our white label product, I think a really good use case is Meta. And we can talk around why a company like Meta would want to engage in that kind of product. Essentially, lots of enterprise groups like Meta and others have done so well establishing massive audiences. They've got like this huge network. And as they've collected more power and more attention, they realize that these customers of theirs want access to different services that they're probably getting elsewhere, like at a bank. And to be fair, banks haven't been the most innovative in the last decade. They've definitely done well at, aside from the GFC, they've done well at brand reputation and kind of giving customers lots of product, but not so well innovation. So they've worked with these groups. These groups rather go, well, maybe we should run an embedded finance program within our company. We've got the users, but we don't really have the ability to go build out a financial product from scratch. That would be very, very time consuming. So they look to work with a group like Crowdz, that essentially where they can leverage our technology and brand with their brand, our technology, and open that up to their customers. And each group will do it differently. Some just want it what we call straight out of the box. They don't want any customization whatsoever. They're quite happy to give that platform just with their logos and branding and color scheme to their customers. Others want to get more involved in the program and maybe put a bit of a twist on it. So Meta did this. They actually made a diversity run program where they looked to finance businesses that were diversity led rather on a bunch of criteria that they'd set out, which was really cool. So they had a kind of campaign around that. We've been running with them, I think, for over a year now, and we've funded roughly 60 million of diversity of businesses that are diversity run, women led, etc. And it's really cool to be part of those programs. So as we're using that as a case study, we're now speaking to many different organizations of the same size that want to run embedded finance programs. And these discussions are keeping Mark and his team extremely busy because a lot of the strategy is around APIs and building on top of APIs. So it's another crucial step in the Crowdz journey.
That's amazing, actually. And I was going to ask this later on, but I'm going to ask this now. Are there any other success stories and partnerships that you can, share with us, of course, which are already in the public domain? Because this one's super cool.
Yeah, I mean, we can speak about what we're going to launch in the near future and about a week and a half in Australia. So we're launching in Australia with one of our partners called EG, which is tell me, James, if I'm wrong, but a fund manager for real estate. So that's going to be the next part of our journey. And interestingly, Australia is really one of the countries that we see a lot of demand, maybe because of the geographical positions and the trade they have with several countries around them. But we do have several programs lined up in Australia. We have some projects we cannot speak about right now, but we are in conversation for launching blockchain-based platform with a clear roadmap, starting with creating a non-fungible token for our receivables and being exchanged on a platform, going towards using stable coins as well, and potentially also creating an open market whereby you can exchange these receivables on different marketplace or even peer-to-peer. We have also other smaller white label, and we also have a program with Citi where we expect to launch this year as well.
I was going to say, it's not only your product roadmap that is full, I believe, for the next 12 to 18 months, but your international expansion plan is as well. That's really cool to know. You guys are not only in North America and Europe, but very much in APAC region as well. So moving on, I know you also recently launched the Avalon Marketplace. So can you tell us a little bit more and, shed some light on it? And what problems are you really trying to solve with the Avalon Marketplace?
This is by far, at least for Mark and I, the most exciting project that we're working on internally. And it comes at an interesting time because NFTs, non-fungible tokens, have a very bad public relations problem right now, which I'll talk a little bit about. There's a lot of misconceptions around what's happening in that space. But firstly, what are we doing with them? So we're taking receivables and we're turning them into NFTs and placing them on chain. Now, people immediately go, well, why would you want to do that? I thought NFTs were only for pictures of like monkeys, like digital monkeys, like Bored Apes, etc. What's going on? There's a few reasons why we're doing it. So if we go back to the kind of core of the financial architecture and what banks are built on, especially when you delve into supply chain finance, everything everything's trapped in information silos. between certain parties, sellers, buyers, funders. So there's no visibility over the supply chain. There's no visibility as to what's happening. That's the first issue. That architecture, then when you apply a payments layer, a transacting layer, once again, you're talking about the SWIFT network if you're going cross-border, which a lot of these customers operate cross-border, particularly if they're exporting. So you look at those two things and you go, on an existing infrastructure, there's issues there because nobody can see what's happening. Everything's really slow. There's lots of paperwork flying around. This isn't the best experience when you look at the buyer, the seller, and the funder. By putting something into a standardized format, which is an NFT, and putting it on chain, two things are happening. One, we're standardizing all the data into a set format. Super important when you delve into the world of syndication and securitization of these asset classes. That's probably another podcast we can talk on because it gets rather technical. But just think, but think of data standardization is really critical. And then once it's on chain, you've got visibility. Technically, depending how much data we wish to expose to chain, you can kind of see a really clear picture as to what's happening. And then lastly, the transacting layer. Mark mentioned the use of stablecoin. And really what that is instantaneous settlement between a funder, a buyer, and a seller. That's completely transparent with no middlemen. It's just instantaneous, which is incredible. So when you wrap all this together, why are we doing it? We're doing it to kind of eradicate information silos, eradicate inefficiencies, and ultimately provide a really great user experience across the chain. Delving deeper, we want to minimize fraud. Fraud's a big issue in finance generally across the globe. And we just want to open up supply chains and provide more liquidity to what people are doing. So at a very high level, that's what we're doing. We can't talk too much about the project, but that we're working with potentially a very big payments company, one of the biggest in the world, around doing this. It's in early stage discussions, but irrespective, Crowdz is building this tokenized version of the marketplace, and it'll get to a point where the SME or the small medium business, as they're financing, won't even realize what they're doing is technically on chain, because the user experience will be so clean. They'll just sit back and go, "Wow, this is a really fast process," and the funder will say the same thing. And then when you delve deeper into the data, it's just very exciting. So I encourage people when they hear the word NFT not to think just about digital images and around environmental destruction, but rather think around the actual uses of standardizing data. But then also around the environmental piece, I'll add, we are building on top of a layer 2 network called Polygon, Ethereum layer 2, incredibly ESG friendly. As well, and Ethereum just converted to proof of stake. They changed their consensus algorithm, and it's had such an impact. Stats suggest that it's reduced electricity consumption worldwide by 0.2% or 0.25%. So these environmental discussions, they've gone fully green, ESG friendly. This is a big step for the industry moving forward. So I've said a lot there. I apologize. Very passionate.
No, that is great. And actually, I was going to ask about ESG as well, and so that's a great segue. Specifically how Crowdz is laying, how are you guys laying the foundation for suppliers and merchants to support environmental and ethical supply chains?
So to be fair, we're still in an early stage and defining the value proposition. But what I would say is, first of all, we would like to provide visibility to start with. So basically, if you have a receivable, you can have a view about the impact it has, or carbon footprint, for example. So you can decide whether you want to invest in it or not. But also, we're thinking about a mechanism about how we can offset some of the impacts this type of receivables have. So that's one thing we're looking at. We have a team based in London looking at what are the different value propositions we can have, and we also trying to include James mentioned of soft score. So that would also include the environmental impact the receivable has basically. And as James mentioned, we are an Ethereum house. We've been playing with Ethereum for a long time. So we appreciate what the main chain offers to us. But the gas fees and the environmental impact of Ethereum was not an option for us. And hopefully, we found Polygon as a good solution moving forward for us.
No, that is a great summary. And we are coming towards the end of the podcast. But before I let you guys go, I have two very quick questions. And one of them is actually, since you spoke so much about blockchain and NFTs and how much there's some negativity surrounding around and some misconceptions. So if both of you had to bust some myths around it, and if there were some positive and actual factual messages that you wanted to tell our listeners, what would that be?
Yeah, I'll start with one. I think a really common misconception is that NFTs are purely for trading digital art.
Yeah.
But that is really not truthful at all. That's been a really popular use case for a lot of cryptocurrency enthusiasts of late, for sure. But really, I encourage people to think about NFTs and how they can be used to standardize data. Technically, they can be used to tokenize any real world asset. It could be a receivable, it could be a certificate of title for a property, it could be anything like that. And once you put that on chain, there is just this place that exists that you can look at and go, hey, this is the database that is actually the source of truth here. And it cannot be tampered with. It's very secure. And you're not relying on a third party like the titles office to kind of give you access to that information, but rather this information exists on the powerful and incredible Ethereum network and distributed database that can be queried anytime by anyone.
What I would say on my side is the blockchain environment is an area for money laundering. At least for us, it's not the case, I would say. Because it all depends what checks you put in place, and to be fair, I would say we'll never be like 100% completely decentralized. We need a level of control, and we still do what we call KYC or KYB, so know your business and know your customer.
Yeah.
And doing all these sanction checks. So basically, as an example, we would not like to sell Russian invoice at the moment to an American investors. So that's not going to happen. So we still do this check. We whitelist the addresses, so to make sure that this is not happening. So there's still a level of control, and we're still trying to avoid any fraudulent or illegal actions happening on the blockchain. Obviously, we don't, as mentioned, we don't want drug dealers buying our invoices in the future.
Of course. Well, thank you so much, both. And before we wrap up, one last question. What's next for you guys? I mean, you have shared a lot in terms of your product roadmap as well as international, expansions. And you did hint that you guys are working with like one of the largest payment companies in the world, which you can't disclose. But any other exciting news we should look forward to?
I think, Mark and I in particular, we're very focused. We're very execution-driven people. We really want to see the Crowdz marketplace in Australia take shape at the end of this month with our partners, this real estate investment fund. Shout out to EG. They're an amazing group, and we're very lucky to be working with them. And I think really start bringing our white paper to life. We're doing a lot of development work. We have some incredible developers in London, Kingsley Hendricks and Abdul, our two guys out there. And, we really want to bring that to life and execute on that. So we're partway through that. And I think moving forward, we should be able to show some market results very soon. We can't wait. So that's at least top of my mind at the moment.
That is exciting. Mark, anything else to pop that up?
I would say 100% to James. We are in acceleration process right now. We're going to see things going live within the next 3 months, and also we setting up, as I'm based in Switzerland, setting up a Crowdz Switzerland entity where I would say where this part of the business will operate, because the regulatory environment is clear about what we can or can't do. So that's probably the best environment to be in.
That's amazing. That's amazing. Well, thank you so much, both. It was lovely speaking with you today.
Likewise. Thank you very much.
Thank you. And there's, I'll just say more power to you and the team at Crowdz as you internationally expand, have more product offerings for your SMEs. That's wonderful stuff. And thank you once again for tuning into Coffee with Innovate Finance. To all our listeners, do look out for upcoming episodes and follow us on Twitter and LinkedIn for more on our events and programs. And as always, until next time, take very good care of yourselves.